Good morning, good afternoon, good evening, and S&Ps, good night. Hello, Cy, how are you? So the S&Ps are pretty quiet here this morning, not much trading going on here at 28.21. Who remembers the last time S&Ps were limit down? Anyone out there? I'll give you a hint. It was the election eve. That's right. Election eve 2016, limit down on the Trump win. Carl Icahn left the victory party, went to buy $1 billion worth of S&P futures and cleaned up. So what happens to limit down is that you have pools building. So I remember, back in the day, used to have a lot of limit moves and a lot of different instruments, and people would be begging to get out of bellies, and we had limit days in the old days in metals, silver, and so forth. So very unusual circumstance, and I have no idea how pools build now without open outcry. They're probably sitting in a deck, sell, GMO orders, get me out. We'll see if something can be done to take them off limit. I don't know about you guys, but I did try a dollar buy at 95.50 last night, and underwater on it. There are some hopes that we could have a little 3 drive here, but unless you came in the right way, and I can't remember the last time we've had crude down $9 in a day. That's been a long time too. So we're looking at history here, and we'll see. One thing I was tweeting about, and I don't have any a lot of conviction to tell you to take risk in here. Sometimes prudence over valor, and sometimes you're better off just being a spectator. Really nowhere to hide. Again, silver failed on this, and even gold having a hard time performing. We're diverging up here, except I don't really think we're going to have a gold top until these settle down. Euro, I'd be real careful about being long here. What's interesting is with the dollar getting smashed, we only made a marginal new high in euro pound. I mean, compare the two. So Friday, actually, after the NFP, I said, there was the euro pound was a better short. It actually did work from here to here, and if you took it home, you gave it back. But again, still acting weak tells me we're getting close to a dollar turn. Here's why I tried it. I had this return line here, and now I think even if we do get a rally, it kind of looks like 92 is coming. The market is choppy. Yeah, and the end, what a debacle. And Greg was talking about it. I think a lot of people thought we might get some bounces from 4.5, but this is a big breakdown. 104.5. It depends where you want to measure the triangle. You could probably go all the way up to 118, right? So if you really want a big picture of it, you just call this a triangle right here, and we're heading towards a bigger triangle here, and looks like 92 down the road. So that's all I have. I'm going to turn it over to the experts and see what they're doing. But remember, everyone, things will settle down eventually, and the markets hopefully will not close down, and we'll be able to trade them. But really, prudence over valor. Protect your capital here. I think it was David Brady who said, may not be a bad time just to watch things for a few weeks.
Here.
What do you believe in that too, Blake?
Dude, this is not, I tweeted and I said, this is just not the time that you want to be a hero.
Yeah.
Uh, yeah, I mean, it, look, I, I'm pretty, I can pretty much guarantee there are a lot of accounts that blew out last night. Those moves, excuse me, let me turn down the volume here in
Especially
my
the
office.
crude, well, everything. Everything.
Everything. I mean,
Yeah.
you know, I'll take over the charts here.
Okay, buddy.
You talk about let's start with, you know, some of the less obvious. Like let's look at the Euro Aussie, for example.
Oh yeah.
Um, Look at that move. We
Wow.
gapped up at 171. We rallied all the way to 182.
Yeah.
Pound Aussie,
Wow.
198 to 208. All right. Pound New Zealand. You know, I mean, I've been pointing out the big, huge weekly bases in these.
Yeah.
Uh, you know, I can guarantee you, because I know traders. Traders tend to fade these big moves. They're like, "Oh, it's moved 500 pips. I got to go ahead and go short, you know, or
Right.
go long or whatever." So I can guarantee you, a lot of accounts got blown out last night, and
He had
that's
like a 6 month range in one candle.
yeah. I mean, but then you take, yeah, you take crude oil. I mean, crude closed on the lows.
Yeah.
Crude oil closed on the lows. We hit now. I'll tell you a little story. What I did last night. I never trade crude. I mean, when I say never, I mean just you have to put that in context. I very rarely trade crude. I've probably traded crude maybe a dozen times in my career, and I've been doing this for 1997, 96, 24 years. Okay. So, and really, you know, trading 23 years. Like, you know, that's when I really started trading, like in the markets, like, you know, so actually 25 years, because I got my license in 95. Um, so anyway, I very rarely trade crude. And last night we were trading near the 161% extension. We were actually hitting lows right here at 28. And I bought crude and I said, all right, I put in my stop below 26. And I put in my stop, I said, I'm going to risk a buck. And I'm going to, you know, this is getting pretty extreme. I went and brushed my teeth. And I said, I'm going to brush my teeth, come back, shut down everything before I go to bed. I came back and I was up 60 cents. I was right here. You can see the little spike up, 15-minute chart. We were right here. I was up like 60 cents and I said, God, screw it. I'm gonna exit and take it off and that's it. And obviously I left a lot of money on the table. I got up this morning. I'm like, dude, I could have made a killing last night, you know, trading a couple contracts of crude, but that was the right decision for me. You know, I know it's like, oh, I left money on the table, but you know what? In this environment, you have to take what you know can when you can. Keep your stops tight. Stop yourself out. You know, you're in a losing trade. Get out, because it can get worse. I was short. This is one of the reasons why I took it off the table. I was short the U.S. dollar Mexican peso right here. Oh no, wait, right through here. It was 20 21. Oh yeah, it was right here. I was short like at 2105. It started to dip. I'm like, oh, I got a nice profit. I moved my stop to like 2125, and I got stopped out, took a loss there right here. And I mean, obviously I could have lost a lot more in that spike. And I really thought about, hey, I'm going to step back in and short it again up here. And I stepped back and I was watching the yen, and that was the time. This is the time where the dollar yen was really uh, going like just absolutely, you know, in the free fall. And I'm like, nah, dollar yen's getting crushed. I can't be short that. Anyway, I ended up picking up the dollar yen at 102.20, and I sold it at 103.05, like literally that spike high right there. and I made back the money that I lost in the peso. And so I came away last night making money, but you also have to keep in mind I was trading probably about a quarter of what I normally trade. Um, because as I explained to you guys in the week ahead video, the volatility is going to increase. And the last thing you want to do is be over leveraged in a position when it's moving against you. And if something starts moving against you, just get out. You know, I can't tell you how many times in the last 20 years I have gotten in a position, got a loss, and I've taken a loss and said, and 15 minutes later said, wow, I'm glad I got out where I got out, because that could have been really ugly. And I'm glad I say that. I'm glad that, you know, I can, you know, I can cut a loss and say, that's it. You know, I'm done. I'm out. You know, I had a, you know, a maximum loss of $5,000 and I lost $1,000, and I'm happy I lost just $1,000 because I'd be down 10 if I was still in it. I can't tell you how many times I've been in that situation. And those types of moves that you make, those are the ones that keep you in the business, right? So
I can't tell you how many times I didn't react and lived with regret.
You can't, not in this market, you know.
Yeah, I mean, I did. I mean,
yeah,
I blew out.
but think about like 90, and thanks, Coach, because your experience is extremely valuable in this type of market. Look, we are in the less than 5% markets right now. 90% of the time, 85% of the time, we're just channeling around range bound, and you can get away with, oh, you know, I bought a little here and I averaged in, and then I made a little bit of money, and I mistimed it, but I still made a little bit of money. You can do that. You can do that a lot of times, and most times in the market. But when the volatility starts to spike, these are the types of markets where you have to, if you get caught on the wrong side, you have to be able to be man up. Even if you're a woman up, get out, take your medicine, and then move along, and keep it small. There is nothing more important in this type of market than preserving your capital, because you can trade. Even with, you take some small losses, you can trade, you can fight another day, but your losses can incrementally increase in this type of market very quickly, where then you have no powder left. You have no account. Then what are you going to do? Right? So, I didn't want to spend too much time preaching, but I'm very concerned about you, the trader. All right. I'm very concerned about you, the trader, about keeping your head above water in this type of environment, because the markets will, like Dale said, the markets will settle down. And when they settle down, they'll give you opportunities. There will be opportunities today. And I'll highlight a couple that I think that we need to be watching for today. But please, please be careful out there. One of my goals, and you know, I've said this to my listeners for about 15 years now. My goal for what I do, doing this face webinar, you guys know I trade for a firm. I'm on with them all day. I have to perform, because if I don't perform, I get fired. You know, that's just the way you are as a trader. So my primary concern as a trader is just to make money. But with ForexAnalytix, I have a little bit different concern, and I have a little bit different of a goal. And it's the same goal I had when I was at the Wise Trade Group for so many years, and why so many of you guys that are listening in right now have listened to me for 8, 10, 12, 15 years. If you go in the chat room, you'll meet lots of people that I've been chatting with for literally over a decade. All right, that have been with me through thick and thin, through up and down markets, through volatility, non-volatility. They've been there. All these guys here, I'll point them. I'll throw up the you guys that are listening in, this is our chat room. Like you guys in the chat room, if you're listening in, like Benedict, BW, how long have you been in the chat room with me? You know, you guys just put in how many years you've been listening in to me over the years, and we've been chatting together. You know, you and I know Amir's in there, Rick, which is Dean in Oklahoma, Nidish is joking, but you know, he's been in there from Singapore for probably 7-8 years, maybe, I want to say roughly. Okay. But what the point I'm trying to make here is that my goal, hey, there you go, Paul. My goal as with ForexAnalytix is to make sure that you guys are here tomorrow. You know, profitable or unprofitable, we are going to have bad days. We will have bad days. We will have good days. That's part of the markets. The most important thing is that you are here. Because if you blow out and you lose all of your money, you will not be here, and you will not be listening in. You will not be supporting ForexAnalytix. You will not be supporting our community. All right. So Rick, thank you very much. That's Dean in Oklahoma, by the way, 17 years. Okay. And look, guys, you know, these are the times where I have to preach a little bit, and it's not, believe me, this is not what I want to do. I want to actually show you guys some really important levels that are coming up. Amir, I met Amir that's right there in the chat room. I've met Amir, I don't know, in person 6-7 times since probably 2005. Roughly, no, maybe 2008. I don't know, something like that. I mean, you know, I've known these guys for a long time. So anyway, I'm going to 2006. All right, well, hey, I was close. So anyway, I'm going to take this off here. Thanks guys for chiming in. I know not everybody listens in all the time, so it's just, you know, for those of you that were listening in, thank you very much. Let's talk about the S&P really quick. We are lock limit down. Yes. The question is, where can we go? We have a pennant formation that points to 2600. Long-term trend line comes in at 25. Okay, I already sent this analysis out for the basic technical analysis in ForexAnalytix. I think we could see that today. I know that might freak you out a little bit that we can drop another 10%, because if you look at limits, we are only allowed to be down 5%, non-trading hours. We're down 5% and we're lock limit down. After that is 7%. So we might go limit down a second time. Level 2 will be a 13% decline. So I don't know if we'll hit the second decline, but let's just imagine from here, you know, this is about another 10% move lower. Okay. Another 10% move lower comes in right at that trend line. That is, unfortunate to say, that is doable. The question is, what's going to happen in the FX market? Well, I'll tell you, I wouldn't want to be, and I'm not, you know, obviously with 100% certainty, because markets are so damn volatile right now. I wouldn't want to be short euros if we drop another 10%. I wouldn't want to be short yen, meaning long dollar yen, if we drop another 10%. The dollar yen can see 99.60. We can. It's entirely possible. The cable could very easily trade up to 133, 135 today in a situation like that. Now, the question that you guys might have is, well, when does the dollar turn into a safe haven currency? My answer to that has always been, and if you were listening a year and a half ago when we were down here and the dollar wasn't a safe haven currency, when we were trading at 2,300, my response back here was, if we break this trend line, the dollar flips to a safe haven currency. My response to you today is going to be the same that it was a year and a half ago when we were trading down here. That if we break this trend line, I believe the dollar flips to a safe haven currency. I don't, and you may have heard this before from me, but I'll say it again for those of you that haven't heard this from me, that the dollar is a safe haven currency when we go into a panic. You might say, well, Blake, we're in a panic right now. Are we? I don't know if we're in a panic. I talk to a lot of people. My wife always laughs at me because I'm a little social and I try to talk to everybody all the time. This kind of guy I am. I'm pretty outgoing person, you know? So, the people that I talk to and when I'm talking to people, everybody's attitude towards me, and just so you guys know, I was at a soccer games this weekend talking to a lot of adult professionals. Everybody knows I'm in the market. People are like, wow, markets are kind of crazy, huh? No one's panicking.
Yeah.
Not yet.
Hey, Blake, when will they shut the market down for the day? What's the number?
I guess down 20%. I guess if we go into level 3, from 2:25 till 3 p.m., close the cash equity market, only 20% price limit will be applicable. So we have to drop 20%.
Okay.
I mean, I guess we go limit down for the day,
Yeah.
But like I was saying earlier, Dale, and you might have stepped away, I think we could drop another 10% from current prices.
Yeah.
So, we could be down 15% of the day. Then, do you think we'll get a panic? Yeah. I'm pretty sure that, the next 24 to 48 hours, you're going to see en masse ETF selling. If we're down another, let's just say we're down 15% on the day by the end of the day today. Then tomorrow or Wednesday, we will be down probably another 10 or 15%. And then we're in panic mode. And that's when the dollar really starts probably ripping. And again, these are just guesses, guys, but I still believe that the market is entirely short euros right now. And remember, the carry trade has been one of the most profitable trades in FX. And I warned you guys the last couple of weeks, yeah, the euro could trade up to 115. It's not like anything's changed in the Eurozone. It's not like I'm bullish euros.
Needless
other
to
than
say,
a positioning standpoint.
About your warning, needless to say about the warning in USD MXN. I mean, so many people thinking that they were smart for collecting 5% yearly for holding US dollar against the Mexican peso. And those that hadn't closed their positions overnight found themselves 12% out of the money within a minute.
Yeah.
And they felt smart for collecting 5% annually and carrying all that risk.
Yeah, it reminds me of option writers. They take in nickels.
Exactly.
And then the steamroller comes and
exactly.
they're broke.
And creams them all. Yes, exactly.
Yeah. So, and you know what? I would not be surprised if the dollar Mexican peso trades up to the mid 20s, maybe 23, 25 in a spike. And I'm not saying sustained. You have to imagine that when I'm saying this, it could be literally this intraday. It could look like that, right? We got to keep an eye on bonds today. We got to keep, if you guys haven't seen what the bond market's doing, I mean, this is yields. Here's the 10-year. I mean, I was pointing that we'd get up here. I mean, look, this is breaking out. I mean,
10-year yield 0.47%.
We're going to shake out a lot of people probably today. And I have to, before I pass it over to you guys, Stelios and Steve, I have to say this again, and Dale, obviously. Before I pass it over to you guys, I have to say this again. This is not the day to be a hero. I know the propensity that you're going to have as a trader is, oh man, this has gone too far. It's got to reverse. Nothing's gone too far. No, there is no too far. The only thing that was too far is equities rallied too far over the last probably 10 years.
Yeah.
And we are now correcting.
Yeah.
We are now correcting, and we could be at 2,500. We could be at 2,600 this week. We could be at 1,700 this week, later this week. I'm not saying that we're going there. I'm just saying that it can happen.
That's the megaphone line, Blake, your lower blue line.
Yeah. I mean, look, we could see
1,800.
You know, I'm just in the camp that whatever you think can't happen can. Whatever you think in your mind, like, oh, there's no way it can go. It can. It can.
Everything
And
can happen.
you have to approach the market with that attitude. I've seen some crazy shish kebab in this market for the last, I mean, I've been through the financial crisis. I've been through,
.com bubble.
September 11th. I've been through the .com bubble. I've seen some crazy ass shish kebab.
Yeah.
And Dale, you've been there since the Great Depression. You've
Yeah,
been there
it
since
was rough.
1918. I'm just kidding, Dale.
But I will tell you something that most people won't remember. I was there during the Hunt silver squeeze when silver went to $50, and then when they changed the rules, silver was limit down for I don't know how many days, and how many people got ruined.
I'm assuming you were, because I wasn't. You were around during the Bretton Woods Agreement. I mean, no, you were, because it was in the 80s, right?
Was it? No, I think it was
71.
71.
1971.
Oh no,
I
maybe
was
you weren't.
yeah.
Summer of
I was
there.
in the dorm.
You were in the dorm. Okay, yeah. I was just I was a twinkle in my father's eye at that point, but anyway.
I lost my virginity that year.
That's funny. So
I wasn't in the
traders.
market. The only thing I lost was my virginity.
What was the name of your boyfriend?
Sheila.
Hey, for you guys that want the trading rules here, I'm gonna. This is the CME trading rules. FX Macro from my office. He posted it on Twitter, so just so you guys can read that. Anyway, guys, economic data goes out the window. Technicals,
Yeah, indeed.
technicals,
Absolutely.
oversold, overbought indicators. Screw those. Throw those out the window. Watch price action. Watch some correlations. Be careful. Don't get yourself. You get into a trade. Before you get into a trade, identify where you need to get out first. So you get into a trade, like let's say I'm just going to use this as an example. Because you're naturally, I want to short the dollar Canadian. Great, fine, do it. I'm not saying do it. I'm just saying that if that's what you're going to do it. But say I'm shorting it at 136.40. I'm only risking the 137. That's where my stop is at. That's going to cost me $500 if I take a loss. That's it. If I lose $500, I'm out. You have to make those decisions ahead of time, not on the fly. So I'll say that again. You have to make your decision on how much money you're going to lose before you get into a trade, not while you're in a trade. Does everybody understand that? Okay. It's all yours, guys. Good luck today.
Hey, Blake.
Hey, and I'll be here in 4 hours, guys. I'll be here for the not on this webinar link, but if you follow me via Twitter, I'll tweet out the daily roundup webinar. I'll be there because you're going to want to listen. I'll see you guys a little later. Good luck.
Thank you.
I'll also put the link.
Thank you.
Now.
Thanks.
Okay.
Thanks, guys.
But guys, today German industrial production for January beat expectations. Come on.
Yeah. Buy everything.
Yeah. These are definitely crazy times, man. I mean, I tweeted on Friday, everybody I was seeing in my stream and hearing people, they're saying, oh, let's see where we're going to start buying this dip and all that. And I tweeted,
Good luck.
I said, that this sell-off probably has a lot more to go when everybody's talking about that, or that we're only back to 2019 levels, etc. I mean, I'm not saying eventually the stock market will recover, but this is far from over. And we've said this on this webinar every day since the beginning of the sell-off, right? So, and also, these moves, they can be crazier than you think. I was trading in 2008 in London, and I remember trading, I was market maker for some credit spreads, LIBOR spreads, and these things were trading between 5 and 10 basis points for 25 years. Nobody ever saw any numbers in, outside of this range. And then suddenly they went 10, 15, 20. I was buying the crap out of them, 20, 25, 30, and then they traded 200. So, it's like, forget about everything you've seen. When panic sets in, it's anything can happen.
Yeah, you have to be able to play the long game. You also have to be able to adapt and play the shorter term game, which has totally different rules. Yes. And unfortunately, a lot of people that think that the market is a one-horse pony, or how they call it, it's not. It can be most of the times, but when that changes, you either adapt or you can blow up within a couple of weeks. As simple as that.
Yeah.
And
one thing that kind of showed its hand today is, besides the metals not performing that great in its environment, Bitcoin doesn't look to be a safe haven. As you were saying, Steve, you wanted to see it tested in adverse conditions, and we're seeing it now. I mean, it's not 3,000, but it's shed about 30% in the last month or so.
Yeah, as I've said many times, the rhetoric about that supports cryptocurrencies has kept changing all the time. Initially, they were trying to persuade that it's the next big thing, thinking that it's going to be a great means of exchange. When the maths were clearly disproving that theory, because, for example, you can have so many transactions as needed, so Bitcoin can actually act as a means of transaction or whatever, they changed the rhetoric, saying that it's new gold, it's your way to preserve value, etc., etc. So it's like an equivalent store of value with better attributes than gold. When that went away, we got a new thesis, which is the benefit of Bitcoin and other cryptocurrencies is that they're uncorrelated to everything. Now, first question is, okay, why do you want to have something to do with an uncorrelated asset? I mean, if you can't make any predictions about how it is going to be correlated with everything else, how exactly can you treat it, in your portfolio? So what kind of a position can you give it in a portfolio? Anyhow, no need to lose much time about cryptocurrencies. The biggest moves here have been obviously stocks, yen, and yields. I mean, oh my God, with yields. I mean, I have no words about it. One thing is for sure, I think that we're seeing the end game with bonds and yields, because obviously we're in some type of a blow-off phase. I have no idea. I mean, I have an idea. Who would want to be lending money, for example, to the US with the official inflation rate being at 2.4%? and 10-year yields at 0.4%, I have no idea who besides the Fed will be available to monetize the debt, to buy the bonds, and if it's the Fed, of course, meaning monetizing the whole debt. Simply put, if you're not in the US, you have only two options for buying US bonds at the moment. Option number one, buying them naked, meaning without hedging the currency risk, which is a huge risk it means you're willing to take, because you would be willing, if you want to go unhedged, it means that you're willing to collect a ridiculously low nominal return, because real returns are negative, risking that if the dollar collapses, which, as I've said many times here, it's an inevitable. It's a matter of when, not if. You're going to be losing multiple times that, likely within a week. Alternatively, if you want to hedge your currency risk, it means that it's not worth buying U.S. Treasuries at all, because you are better off buying, for example, if you're a European, you're better off buying bonds, which are negatively yielding. But first of all, inflation is much lower, and most importantly, you don't have to hedge the currency risk because it's denominated in euros. Not only that, if you want me to go more in detail, I can even give you a third reason. If you're buying bonds, for example, even in the worst case scenario that you actually have a Eurozone breakup, you're not going to get your money back in euros. You're going to get your money back in Deutschmarks, which, 100% are going to be by far the strongest currency out there, considering the fiscal position of Germany. If for some reason we had a breakup of the European Union or Eurozone, the Deutsche Mark would be instantly the the strongest fiat currency on the planet. No questions about it. So that means that now that the Fed is going to, have to pump up the money printing even more, I think they're going to have to monetize the full extent of the US debt. Now, if you think that this leaves any alternative to US dollars getting destroyed, I have no idea what to tell you. I can tell you one thing for sure. The dollar peaked 21st of February. Let's go to the S&P. S&P, you can see, peaked 20th of February. Not a coincidence that, with only 1 day of difference, those two found a high. Almost at 100, we reached 99.91. And since we've gone all the way down, broken through this ascending channel's trendline support, broken through 96.36, which was the previous low. So in essence, now having posted a lower low after a very, very long time. And I think the dollar can go a lot lower. I know that Blake said, and we might have a period, I agree initially, that if things start getting even uglier, dollar might find a bid because, the world has gotten used to buying dollars, when things are in distress. But if we're talking about longer term, I've said again and again and again that you should be very careful, because during this financial crisis, the dollar's role might change. And one of the main reasons that might be the case is the fact that the US economy goes into this likely recession being by far at the worst fiscal position of any developed country on the planet. So I have no idea who would want to be putting their money in an economy that is in the brink of disaster. I mean, the only thing that's holding the US economy from not completely collapsing is the fact that the US dollar is still the world reserves currency. If for some reason you could take that away, the US economy would collapse in an instant with the current numbers that we have. And, who knows how worse it is. Anyhow, bottom line, Euro USD, we kept saying again and again and again, the Euro USD was in a prolonged downtrend, but I kept repeating, I don't want to be in the short side, because the next big move, whenever it comes, is going to be to the upside. Yeah, I mean, 107, 115 in 12, 13 trading days. Okay, I think that proves the point. Needless to say, if you see any type of a pullback towards 112.50, if you get very, very lucky and it's all the way down towards 111.50, you should be buying it if you're asking me. Of course, you should be doing whatever you think is right for, your trading account and, based on your analysis. But, I'm just giving you my perspective as always. I mean, I'm not giving trading advice. I mean, I'm giving you what I think is going to happen in the markets. If you believe that I'm, most often right and wrong, you can take it into account. If you think it's the opposite, you might even want to use me as a contrarian indicator. But that's your prerogative. Now, USD yen, I wrote in during the weekend analysis that USD yen breaking through 105.33, which was a key area of support. And why is that? Because that's the long-term trendline support of this multi-year symmetrical triangle, should take us rather soon towards the 100 level. And, the moment I was writing that, I thought, some people are going to think that I'm lazy. And we're at 105.30. Don't you have in your weekend analysis, don't you have some support levels to give us, that are closer to this? But, the reason I wrote that, it should take us close to 100 is because I honestly and really believed that once we slice through 105.30, we can find ourselves near 100 very, very quickly. It actually needed a few minutes to find ourselves at 101.50, and 150, which is the next downside support, can happen even within the day. But if not within the day, definitely easily within the week. So this has broken down. It has done the exact opposite that USD MXN has done, and it's not a coincidence. I mean, look at those two charts, because those two charts are two different sides of the same coin. Both of them show the complacency of the people that were buying risk at stupidly high valuations, at an economy, at a global economic environment that was stupidly mispricing any type of danger, thinking that the omnipotent central banks can save you from no matter what the situation throws at you. I was warning again and again and again that these people are going to go to the cleaners sooner rather than later. Speaking of which, how's Kip, coach? So have a look at what was happening here in USD MXN. USD MXN initially broke down from a multi-year symmetrical triangle. People were buying the Mexican peso against the US dollar to collect the rate differential, which was roughly 5%. So in order for them to collect a 5% annual yield, they were willing to take the risk of something like that happening. Guess what? Now, these people that were hoping for 5% found themselves at the highs of the day today being 19% out of the money from the lows. So in essence, what they would be hoping to collect in a period of almost 4 years. Now, the similarities here are very clear. USD MXN broke through a multi-year symmetrical triangle to the downside, and that proved to be a false breakdown and then exploded higher. Now, look at the USD yen. USD yen broke through to the upside of a multi-year symmetrical triangle that proved to be a false break, and now it broke down in the other direction. Guess what's going to happen from here? As long as we stay below 105.30, the path of least resistance is lower. And when I'm saying lower, I think we can easily see 96.60, a consolidation area back in 2013. You can see there. So those of you that weren't around during the 2008 financial crisis, trust me, you don't want to be fading this type of moves. And if you want to be fading them, make sure you do it taking into account volatility, meaning adjust your risk based on volatility. I bought Friday afternoon, I bought 1/4 of my regular position in crude, looking for this to play out, right? This type of rebound. I also did it consciously, this type of rebound that I left here. I also did it consciously because, as I've said here multiple times, and history has shown it again and again, 9 out of 10 surprises you get over a weekend, when you do get surprises, of course, are crude oil positive, right? So I bought myself 1/4, and then I increased my position for, by another 1/4 at the end of the night, wanting to see a rebound towards, 45 to cover, because I did believe, and I do believe, that crude remains in a downtrend. I've said that multiple times. Guess what? I found myself being in the biggest downside move we've seen in the history of this market. I didn't cover at the open. I don't use stop losses, so I didn't get stopped. I did cover at 32.80 this morning, as I wrote in the chat room, and I got myself a loss of like 11% on a regular position because I was in for a half position. In essence, I wiped out 2/3 of the profits I've made during the past month, which has been an amazing month for me, because those of you that are here, you know that I've been in the right side of the market. But I'm still here, and I can tell the story. Why? Because, I wanted to fade this market, and I don't regret for doing so, because I've done that, 500 times in my career, and I've made more money than lost. But at least I knew to have the proper leverage, so I actually don't blow up on my account. I didn't even actually blow up my profits of the last month. So, you want to take whatever risk you want to take. Make sure you're doing it using the right leverage. The same reason why when I shorted palladium, again, I started with only 1/4 of a position, and I explained why I did that. Because palladium proved that it can move 13% within a day. So, something that moves 13% within a day, within a normal day that day, you can have, a full regular position in that, because your full regular position is not usually being, adjusted based on something that can move 13% on a day, unless you're a stock trader. But I'm not a stock trader, right? So, do what you do, but make sure you use the right leverage to be there and actually prosper in the long term. My outlook on silver. So, yeah, listen. Now, having to do with silver, both gold and silver, actually, I'm going to talk about. So here's gold. Gold did hit new highs today. Actually, it went above 1700, as you see. But, clearly, it's not performing that well. I mean, it is losing some momentum at the moment, especially considering the fact that the dollar has been getting decimated during the past couple of weeks. Gold hasn't been performing that well. Silver, even worse. Now, under such periods, silver is always underperforming gold. Why? Because silver, big part of demand for silver comes through, manufacturing and several industries.
You said last week silver's a sale at 1750-60 area.
Yeah, I did. That if you want to sell silver, you should be selling it there. Now, obviously, silver is not going to have a good time if we're going into a recession, which I strongly believe we are. Gold, on the other hand, shouldn't be having so much trouble. Depends on what central banks, decide to do. But, being like 90% sure that the central banks are going to go, all in monetary policy, and it's going to be reckless as it has never been, I fail to see how even a decent pullback in gold can prove to be more than a corrective move. Can gold, move back to 1550, 1480, 1425? Yes, it's not unlikely, but do I think that, gold is going to reverse from here and like collapse? No. Something like that? No. I absolutely don't. Because the circumstances, a lot of people might be like, look what happened in gold in 2008. And I'm going to turn around and tell you that the situation in 2008 was very, very different with what the situation is today in various different aspects. For example, one big difference in 2008 between 2008 and today is the following. For those of you that don't remember, back in 2008, dollar had moved from 120 down to 70. So in essence, when the financial crisis began, the dollar was coming from a period of a 40% depreciation. 40% depreciation, right? Within a period of like, what was it, 6-7 years, something like that. So first of all, in this case, the US, as I said prior to what I'm saying now, is beginning the financial crisis being by far in the worst fiscal position of any developed country. And second of all, the dollar is not coming from a period that it got decimated, like dropped 40% within like 6-7 years, like it was like penny stock. But it's coming from a period that it was actually overperforming, especially in comparison to what it was supposed to be doing. I also think that the Fed is going to be the first central bank that's going to go all in monetary policy. So, as I was saying before, I think there is a big chance that the dollar is not going to be repeating the behavior it had during the previous financial crisis, but it's actually going to be doing the opposite. Now, there might be a period that the market is going to start buying dollars in a Pavlovian reaction, like, oh, things are getting very ugly, so let's buy dollars because that worked the previous time. So, temporarily we might see some type of a recovery during the crisis because of that. But I think that at the end, the market is going to see that that's the wrong place to have your money. And this market is going to tank. And I see really no way that with real rates being deeply negative, and QE, going up, who knows how much, helicopter money and whatever else. By the way, QE3, if I remember right, was like 80 billion per month. Just last week, the Fed increased its balance sheet by 85 billion in a week. And we're still, yes, Delio.
Sorry to interrupt. They announced today, I don't know if you missed it or not, about an hour ago, that they're going to increase the overnight repo and term repo.
Yeah.
Overnight to 150 billion overnight repo.
Overnight to 150 billion. And a lot of people don't know, we're not yet, it's going to take, in my opinion, very few weeks. We're not yet at the all-time highs of the size of the Fed's balance sheet, Stelio, but many people don't know that we are at an all-time high in the Fed's holding of treasuries. Because I remind you that the vast majority of the balance sheet of the Fed is consisted by two items: MBSs, for those that don't know, that's mortgage-backed securities, which they started buying en masse when the housing market blew up in 2007, 2008, and treasuries. So we might not be at an all-time high yet in the total assets of the balance sheet, but we are already in an all-time high in the holding of treasuries, roughly at 2.5 trillion. Trust me, during this recession, that's going to more than double. As I said, from what I see here and from yields being what they are, the Fed is not going to end up being the buyer of last recourse. It's going to be the only buyer left for treasuries on the planet. So they're going to have to probably monetize every single bond that goes out there. And guess what? They're going to be issuing more and more bonds because, as I've been saying, the US is currently running a real deficit of something like 8 to 9%. And we know as a fact that the moment an economy goes in a recession, that increases substantially, almost instantly, like within 6 months, that should go to like 12%, 11, 12%. So, good luck. Good luck, because, the Fed is going to be the only one buying that, those issuances, at least at at these rates. Obviously, there is like, no price discovery. There is like no risk factoring in this market whatsoever, because who wants to be lending money to the most irresponsible government on the Western world that has openly admitted that they can never repay their debts? I remind you that Obama openly admitted when he wanted to persuade the Congress to actually increase the debt ceiling, he openly admitted that if they don't increase the debt ceiling, the US is going to go bankrupt. It's going to default. Why is that? Theoretically speaking, you don't have to default. You can just say instantly that, okay, I'm going to balance my budget and I don't need to increase the debt ceiling. I mean, when you actually, say openly that you either let me increase my deficits and my debt, or I will have to default. I mean, it's an open admission that, this is simply a Ponzi scheme, because it can only keep going as long as you can get more money in the system. So now the Fed is going to be the only player in the game. Now, if you think that there is any kind of scenario that this is going to prove to be dollar positive, good luck. I want to hear what you're thinking, but good luck. Silver outlook on EuroCAD. Sorry, but we're going to have a look at more mainstream things, and if I have time, I will be more than happy to have a look at it. So, needless to say, there isn't a single yen pair that hasn't broken down.
Steve, do we have record highs in the gold-silver ratio today after this?
Yes, we do. I think we're somewhere at 97.
Okay.
Let me see. Yeah. Oh, actually, we were at 97. We are at 99.7. So we've now got to the point that you actually need 100 ounces of silver to buy 1 ounce of gold. Needless to say that this, at some point in the not so distant future, is going to be one of the best trades out there, right?
Yeah,
I mean,
so.
rebalancing the ratio between gold and silver. So I think there's going to be a time.
Maybe at your 106, 1.618, maybe up there.
102.
It's like drive 2. Yeah, 102. Yeah.
Might be. Yes.
Interesting. Thank you.
Palladium is tanking again today. I actually managed to catch this move yesterday night, because when I saw how the markets would open, the moment this opened and it was still at 2,500, I thought that once the market gets locked in, Palladium is going to have to at least keep moving to the downside. So I found myself $150 in the money. At some point, I took half my profits there, and I'm still holding the rest of the position. So, I still keep squeezing money out of Palladium. Now, on the other hand, I was mentioning to Stelios, Dale, just look at copper. Copper was trading at multi-year lows today, but still, I mean, with the market being decimated, literally, copper is not doing that bad, right?
Yeah.
I mean, look at this, February 20th, as the rest of the markets, it topped out, but it topped out at 263. And we're currently at 250. I mean, with everything being...
Should be at 230 right now.
Yeah, I mean, we've lost since then like 5%. 5%. And there are other markets that, have been destroyed, completely destroyed. So I have to admit that, although there's nothing looking bullish here in this chart, it's holding much better than anyone would expect. So it makes me think that at some point, copper is going to like squeeze higher. And keep in mind that, copper is here priced against dollars again. So, I mean, copper might just, take heads off just because of, a move in the dollar eventually. And one of the reasons it's holding up is because it's denominated in dollars here. And as we said, just look at this move in the dollar. I mean, the dollar has moved like 5% lower, right?
Yeah. Dr. Copper's taken some Viagra.
Yeah. huge moves in Aussie against everything and Kiwi against everything. Just look at this weeks. That tells me that we might have some type of temporary recovery, especially just look the Aussie. Look at this lower wick, Aussie against dollar. Just look at this. I mean, when was the last time you saw a 4.5% lower wick or upper wick or whatever in a currency like this, like Kiwi? Look at this. Multi-year lows, both of them, and then immediate reversal. I would be very, very careful here with the Aussie and the Kiwi. Very careful, especially now that there is absolutely no long position left on the market, because I bet that all of those people that were trying to, play the other side had at least, put their stop losses below the lows, right?
Yeah,
Because
they're gone.
we're like, yeah, they're gone. That's it. They're wiped out since yesterday night. That's it. So, I would be very careful here. For example, in the case of the Aussie against the dollar, above 66.70, I think we can squeeze a lot higher. Kiwi, above like 64, 64.50, we can squeeze higher. So be very careful. I wouldn't be advocating that you buy those against the yen for obvious reasons, because as I showed previously, the yen might keep pushing higher or lower if you're talking about USD yen, a lot more than you would expect. But against the dollar, I think you might have a chance there if we break through those levels. Not that they would be my first choice, right? But I mean, they can do well. Now, there are
Interview
two more
time,
pairs.
Steve.
Very fast. Two more pairs I want to talk about. First of all, I warned you in advance that above 133 in USD CAD, we would be finding ourselves at 135.60. Very fast. We actually got almost to 138. What I want to say here is keep looking higher. So if there is one currency, as I said, that I would be bullish the dollar against, that's the CAD. And one more thing. We had the biggest move lower in crude that we've seen in history. And yet, USD NOK is still unable to break through this multi-year ascending channel here. Bottom line, I think that if you're looking to fade moves from yesterday, USD NOK might be a good bet here. I mean, multi-year resistance, unable to break through despite having crude making the biggest move in its history to the downside. You might want to consider that the risk reward is in your favor. Thank you, Dale. Who do we have today, by the way?
Anka Metcalf, trade out loud.
Okay, great.
Okay,
So,
Anka,
see you in the chat room.
Okay, I'm setting you up now, Anka.
Yeah, also needless to say, if you were looking for an opportunity to be with us in ForexAnalytix, there is obviously no better time than this, right?
Yes. Surround yourself with people better than you. Good morning, Anka. How are you on this historic day?
God, how is everybody doing?
Yeah. So to share your screen, Steve, can you stop sharing, please?
Okay.
Okay. So you'll see a little green box that says share.
All right.
And you can put your screen up. So great to be a day trader and not take positions home overnight in this environment, huh, Anka?
Definitely. Let me just start the screen share just in a moment. All right. I'm on a different computer. I'm actually on a laptop right now. I have my Zoom with my trading room on.
Oh, okay. Well, it's working now. We have the SPs. Okay. So what are you telling your people on a day like this? Better to be a spectator?
Absolutely. And this is something that I don't take lightly. Volatility is very serious. Volatility was very serious in 2018, but it's becoming more and more serious when we have the maximum fear that is coming from the COVID-19 situation, more expansion into new states. I was looking at news a little bit earlier, and it's definitely very scary because the markets do not know how to react in a case of pandemic, right? So we don't know. There are a lot of unknowns. Can we trust the data that is coming from China or not? Can we trust any kind of international data? How many individuals are literally infected? Are there some that are just self-quarantined and their numbers are not yet into a statistic? I mean, there are a lot of unknowns in the market, and everybody knows that the market does not like uncertainty, and it's definitely reacting this way. But I have to tell you, I have been trading for more than 20 years professionally, and I don't recall a time where we looked at the market and in less than 4 minutes the Dow was plummeting to 1,000 points. We saw the S&P as well drastically lower. I actually, at the beginning of the trading session last night at 6 o'clock, I did a little video because this is unprecedented. I want, all the traders to be able to have this, on file and kind of like make reference of this. We're living history right now. So this is something unprecedented.
Well, the S&Ps were limit down on election eve when
Yes.
Trump was elected, and they came off the limit and they were by the next morning unchanged. This looks much different because we've been sitting limit down for a while, and most traders do not have experience with limit moves. They used to be 40 years ago, pretty common. I've seen limit moves in almost every instrument back then, but in the modern era, it doesn't happen as often. So is today a day where you won't even day trade? And since the volatility picked up, besides using less leverage, Anka, are you using smaller TFs to look for opportunities?
The reality is that on
Timeframes?
a day like today, we're definitely, the ranges are ginormous.
Yeah.
We're talking about hundreds of points in the Dow for a bar. Like if you're looking at a 1 minute bar in the Dow, it's just incredible. If you're looking at the mini S&P, as we were going into the session, it was just incredible. I think that the best thing to do right now is be a spectator, be humble, and do not take this lightly. I don't want to be a hero in this market. First off, I want to see, the price behavior, how the price will be handled, a little bit of psychology, that goes into each and every move. And I am literally going to be a spectator. I don't intend on doing anything. I still have a position in gold, and gold is seen as a safe haven. This was an older position from January, from a bigger breakout. But as far as the indices go, I will just be a spectator. I think that we
Are you a little disappointed that gold isn't 2,000 with this going on?
No, I think that gold pretty much has priced in a little bit of the drama and a bit, this chaos that is going on right now with the coronavirus quite some time ago. So it's been building up and building up and building up. And I think that it's kind of like a fair value where it is right now. I'm still bullish for the rest of the year. We have peaks. Let me just bring a chart of gold. I can tell you it's really challenging to be, from a 6 monitor to go to a laptop. It's like super challenging.
Not as much real estate.
I know. Okay, so this is a monthly chart of gold, and definitely there is room for the next resistance close to the 1800s.
Okay.
What I piggybanked on is last December, this pullback and reversal, and we were all over this pullback reversal as soon as it started trending a little bit higher. We were big buyers into last year. In fact, in my portfolio for last year, the massive gainer was, and I'm a futures trader, so the biggest gains came from gold, and not from the indices that I trade on a daily basis, but more into gold that I swing trade. So we had a really nice reversal here that started to push higher. We already initiated, so for the month of March, we already initiated continuation from the prior month, and we're ready to set for new highs. So for me, gold is a core trade. So I have it for long term. We have been swinging, and actually on Friday, believe it or not, okay, let me take you right here. On Friday, we have some targets into 80 and 90. We just hit the 90 level, and then I trailed that at 90, and the rest of the position trailed out into 65. And that was on Friday. And then, you know, to see this happen, you know, it's like, oh, okay. But anyways, I'm not complacent in any market. So my trail stop is my trail stop, and I do respect the hard stops. And I think one of the most important things that whatever you're trading, and especially in future indices, you have to make sure that you know where to place your stops and how to adjust your stops. I'm fine with keeping soft stops as long as we're having a normal market environment, like a trending market environment. But as soon as we you know, step into volatility, hard stops are a must. So these are literally going to break your account. And don't forget, in 2018, when we had the last volatility, let's go back here again to a monthly chart in the S&P. So when we had, let me go to the monthly here.
The worst December since the Depression.
Exactly. Right. So this is the 2018 here. This is the first volatility spike that came into the market. And then, I mean, this is very, you know, serious, because if you don't have a hard stop in, this can be very dangerous. And don't forget that throughout this year, like throughout this volatile year, there were 374 hedge funds worldwide that closed doors. And we're talking about hedge funds. So the next time, you know, any trader decides to click on the buy button or the sell button, just think, you know, who are we trading with, or who are we trading against? And this is going to, you know, pretty much put everything in perspective, and, you know, kind of, you know, be humble. One of the things that I'm using, though, you know, in volatile cases and in volatile markets, I'm using way less risk than I typically allocate in trading markets. So now, with, you know, let's say I'm allocating full risk when we're having a trading market, when the market is starting to pull back, or it's not really behaving the way I want it to behave technically, I always use half of my risk. Now I'm down to a quarter of my risk for any trades. And and I think that we need to adapt as traders. A lot of times, you know, I get a lot of questions saying, hey, what chart are you looking at, and what time frame are you going to be trading today, or what time frame are you trading in general? And there is no unique answer that I can provide for that. It's just a blend, and you're going to have to wait and see where the pattern is setting up. Whether, you know, and even if you're a very aggressive day trader, even if you're trading tick charts or 1, 2, 3, 5 minute charts, you have to make sure that you maintain your balance and don't overlook the complexity of the multi-chart time frame, because literally all these moves are dictated by higher time frames. And I'm a true believer in doing my homework on the 1 hour, 4 hour, and daily charts, and then transfer everything that I find to smaller time frames. And you're going to see that literally almost 90% of the time, these key levels from higher time frames are going to impact those smaller time frames. So oftentimes, you know, a lot of traders that are the beginner stage feel more confident in smaller time frames because that is where they find their smaller stops. And typically, you have smaller stops from setups, from clusters, etc. But the reality is that if you're zooming out a little bit, and this works in my case, you're going to have a broader picture. So sometimes you can see a buy that is into a smaller time frame structure as the tick chart or the 1 minute or the 5 or whatever small time frame you're using, and then if you're having a divergency on a higher time frame, such as 1 hour or 4 hour, and if they're setting up for a sell where you're finding smaller time frames into a buy, you're going to see that your trade is going to trigger and then it's going to fail because a higher time frame impact.
Can I ask you, I don't see a lot of people using it. Can you tell us why and how you use Williams %R?
Okay, that's a good question. I typically use it for my swing trading and so for my longer term trading. Typically, when the price is into, well, literally when it's below 80, going into 100 it is an indication that it's into an oversold area, and a bounce may be imminent. However, I do not trade, for instance, the indicator. So if the indicator is telling me that I'm in an oversold area, that doesn't necessarily mean that we are due for a bounce. Remember that indices, stocks, any asset can remain into oversold conditions for hours or even days at a time or even months at a time before they rotate. So the structure of the chart is very important, but this is an indicator that I use for stocks. I also use it for future indices, especially for my swing trading and for trading activity. So typically what you want to see is you want to see the indicator show a read below 80 for oversold, and you want to see a read above 20 for an overbought. And notice here, I don't even use it on the 1 hour chart. I use it typically on a daily or a weekly chart structure. But notice when we made these highs right here into the mini S&P, so we hovered and we stayed here for quite a long time. So from February 4th all the way into February 20th. So this is not an indication that this is a top by any means. Are we into overbought area, and is the price, has the price gravitated into this overbought area? Yes, absolutely.
So it doesn't give you any signals. It just says overbought, oversold. So why Williams %R for that instead of, say, RSI?
I have been using RSIs a long time ago. I am not a big fan of indicators. I like very clean charts. And in fact, I just have the support resistance lines that I drew here, and these are from last Friday. But I typically don't like to have any kind of indicator. For me, price is the only true indicator, and I'm a true believer in candlesticks, price action, and that's pretty much it. Just a few moving averages, and that's it. I don't pay attention to any kind of indicator when I initiate my trade.
Okay. So any prognostications? I know you're mainly a day trader, so that was a silly question. Why don't you show us and people that have heard you and will see the video later, how they could follow you, how they could work with you, maybe go to your website and talk about what you do and what your business model is, and if you teach or provide signals. It's time for your commercial, Anka.
Okay, so I have been trading professionally for 20 years. I specialize in trading the New York trading session futures only for the first 2 hours. I specialize in the 4 futures indices, the mini Dow, the mini S&P 500.
Have you tried the micro S&P yet? Have you traded it?
Yes, I actually, when it first came out last year, it was incredible. I wish we had micros in 2018, but I'm glad micros are on, and I'm glad, Dale, you brought the subject up, because micros are a great alternative, especially in market volatility, because you can position size for your trade way better. I have used micros many times in and especially when they came out, and especially when we have like really wide ranges, they provide you the opportunity to position size more correctly. So imagine, you know, now when the market is going to open and you see that killer setup, and you're noticing that you cannot take it with a full size contract because it may blow up your account. The risk level may be very elevated. And I'm expecting risk levels right now in the Dow probably at around 300 point range. So definitely this is not something that you are going to, if you have a smaller account size, this is something that you may not consider you know, trading with a full size, but therefore the mini micros are coming to the rescue because you can position size for that. So I'm glad you brought this up, because I'm a true believer in position sizing, and the only variable in trading should be the distance between the entry and the stop, and the only constant is the risk amount per trade. This is something that is very important, and this is something that is literally going to make or break, you know, any account out there, because there's this misconception that says, hey, I have a 25K account, I'm going to trade lots of three contracts. Well, it's totally wrong to do it that way. And you know, there are a lot of books on the matter, and I don't know if I can make any reference to some books.
Go ahead.
You know, okay, Van Tharp has a great book on that, and he talks a lot about risk to reward ratio, and you're going to get a plethora of information from that. And you're going to see why you need to risk the same amount size, and he explains it really well why you need to use the same risk amount per trade, and how easily it is to get out of a hole that you dug yourself into if you're using that particular size.
Okay.
There's a lot, you know, there's a lot that, you know, a lot of advantages into trading minis. I just wish, and by the way, not only futures indices have minis of micros available, but we also have them in gold, and not a lot of traders know that. There's a mini gold and a micro gold. Also, there is a mini in oil, so it's about half the size. So now that, you know, oil is oil had that 30% down, obviously it's going to be subject to huge ranges. So keep you know, I'm always reminding my traders to keep an eye on, and don't step away from these minis, because the opportunities are there, and especially in volatile markets, they provide a great vehicle for us to trade. Even copper. I know you guys talked about copper, and I enjoyed you know,
It's very good. Yeah. How it's been holding up and so forth. So the best way to follow you, Anka, your Twitter handle is Trade Out Loud. So I assume that you keep your mic on.
Yes. So.
All right. During your sessions, what are the hours? What are the hours for your room?
I trade from 9 o'clock until 12 o'clock, and I day trade future indices and commodities, obviously, but those are more into swing trading. And I swing trade, very actively swing trade and active invest in stocks and ETFs.
Okay. Would you like to show your website? Can you do it on your laptop?
Sure. Let's see if I could do it here. Okay, let's see. All right. All right, let's try to get, okay. I don't know if you guys can see the screen right now. Do you guys still see the chart?
We still have the S&P.
Okay, still have the S&P. Okay, just one sec. Let me just switch that. There was a time when Zoom actually allowed us to flip through charts.
Okay, it's come your, there we go.
Okay, so if you guys want to visit the trading room, you find more information here on our trading room, their schedule, what to trade, etc. We also have transparent portfolio results, all the trades that were taken since the inception of the trading room. You just click on the portfolio, everything with the good, the bad, and the ugly. We have futures alerts. This is another service that is designed for the trader that wants to manage their own trades, and we just provide you the trading parameters, and you'll get to manage it on your own. In the futures trading room, I do all the work. So I find the trades. It's a hand-holding system. I find the trade. I establish the parameters, and I trail it for everyone in the room. And also we provide swing trading for stocks. This is only for stocks and ETFs. So if you're interested in trading stocks and ETFs, this is where you go. We also provide trading education, swing trading for stocks and ETFs. We offer our most popular class, that is the Power Income Futures Trading course, which starts at the end of the month, March 30th. It's a 5-day. All our classes are live. They are recorded. You are going to receive the recording, live retakes and for all the classes, and you have me as your mentor throughout your trading career, and providing you with all the assistance that you need to achieve your trading goals. We also have private coaching, and for more information, just email us at info@tradeoutloud.com, or just hop on the website and fill out that contact form, and we'll provide you more information.
Anka, are you doing anything personally for yourself, your family? Are you practicing social distancing right now? Anything you're doing to prepare for the unknown with this virus?
That is a great question, and I think that we have to be very vigilant. There have been some cases here in Florida. In fact, there are 2 cases in South Florida, not in the area where I live in the Palm Beach counties, but in Broward County, and there are also some in the Tampa area. So far, I think that it's a great idea, to keep a distance from gatherings as much as you can. I don't take this lightly. I have no idea what to expect from this, but I think prevention, what they're saying, like wash your hands, obviously the normal hand sanitizer. I think we're very fortunate as traders because we work from home and we're not interacting with anyone. And I think this is a blessing. And the more the less exposure we have outside, I think for the best. And I'm a little bit cautious because there are a lot of tourists in Florida, and they're coming from up north. I mean, this is the thing here, and also it's a port, right? So you're having all these cruises that are coming to Fort Lauderdale, which is 20 minutes from where I live, and you're having a lot of tourists from all over the world. So it's not only from US, but they're all from all over the world. So yeah, I have to be a little bit more cautious.
Okay, I really, the reason I asked was I was going to ask you to go dancing tonight, but since you're practicing social distancing, maybe I could take a rain check on that. So really, Anka, thank you. I wish you and your traders and your mentees safety, and when the dust clears, much success, and that your trades are green and you have a great 2020, and teach people how to that there are more than bull markets, there are bear markets, and that they're aware of it going forward, and that down is faster.
Thank you so much, Dale, for the invite. It was a pleasure being here again today.
Yeah, well, you're my trading warrior sister, like it or not. So Anka Metcalf, everybody, follow her, check her out. She might suit your style if you're a scalper. And want to thank you for being with us on a very historic day, Anka. Good hunting.
Thank you so much. Have a great rest of the day, everyone, and be cautious of this market. Thank you
the markets will be here. Make sure your equity.
Oh, yeah.
Yeah, make sure your equity is. Okay, thank you, Anka.
Thank you so much, everyone.
All right, and that's a wrap for us, everyone, and see everyone for turnaround Tuesday, who knows, right? So really, everyone, be careful out there, not, not just in the markets, but until this thing passes. And I'll see everyone tomorrow. Good hunting the rest of the day. And remember, you have a lot of guidance in members chat. Blake's in there, Steve's in there, a lot of pros. And we'll see everyone tomorrow. Yes, we record all of these and they'll be tweeted on Twitter. Or you could go to our YouTube channel, Rizwan. Okay, remember, don't just count your pips, count your blessings. And a lot of people won't be able to count pips today, so maybe they'll focus on their blessings. Talk to everyone tomorrow. Adios.